As of the making of this video, many markets are at or near record levels. The S&P 500 is trading near its all-time highs. So, is the Nasdaq? European stocks are also trading near their all-time highs. When we look at the price action on the weekly time frame, almost every asset class is in an uptrend. We have the S&P 500, Nasdaq, Euro Stoxx 50, Bitcoin and they're all in an uptrend. Valuations are getting high. The Nasdaq is now trading at a P/E ratio of 26 times. That's the highest since the dot-com bubble. Of course, we have other asset classes that are still very much in the bargain bin. I will talk about them in a minute, but first, let's look at the fund flow analysis. In the last week alone, investors bought a net $6.9 billion worth of U.S. stocks through the previous week it was $7.5 billion. The week before that, it was $5.7 billion. There's a lot of bullish sentiment, and that's why we're seeing these higher highs. But this is precisely how bubbles form. When there's a lot of money flowing into a market, it's very difficult to find good entry points. But if you learn how to trade during a bull market, when the market goes into a downtrend, you will swim like a shark. If you want to buy the dip, you will probably get shaken out at these levels, because the dip buying has already pushed the prices up. But these bubbles will burst. You just have to wait for it, and when it does, it will create excellent trading opportunities. If you know how to short those assets, you could make a lot of money. There's a lot of money flowing into stock markets. Now, some of you may say that there aren't any bubbles because interest rates are higher. Well, you would be wrong. Bubbles don't care about interest rates. There's no such thing as a short squeeze in a bubble. There's only a short squeeze when traders get trapped in a bubble. The higher the interest rates, the more leveraged the traders are. The bigger the bubble gets, and the sharper the correction is when it bursts. Right now, we are seeing pockets of bubbles in various asset classes, and these bubbles are very dangerous because they're prone to sudden, sharp corrections. Take a look at silver, for example. It's up more than 50% in the last 3 months. That's bubble territory. What about Bitcoin? It's up 160% in the last 6 months. That's also bubble territory. The Nasdaq is up 30% in the last 6 months. That's bubble territory. Yes, some sectors like energy and financials are still down, but that doesn't matter because the central bank put a bid under the stock market, and it's working. The money printers are running at full steam, and the party is just getting started. But here's the problem. If you learned how to fish when the market was in a downtrend, then you would have a very hard time fishing in a bull market.